Hey traders from around the world, it's your boy Jeremy Alexander Newsome with reallifetrading.com, and our mission is to enrich lives. So the purpose of this video is just to educate you fine trading folk about what long-term moving averages I use and why I use them and how I use them. Going to be a quick, easy video. So let's pull up the long-term moving averages, and I do have them on all my charts. I like using them. This is a software called tradingview.com, and that little arrow just simply represents frequently used indicators. So anyway, the 100, 200 simple moving average, why do I use them? Pretty easy answer. The reason I use them is because a lot of other people use them. So it's kind of like a self-fulfilling prophecy, right? If you know a lot of people are doing something, you might as well do it as well if you can. So the blue line is the 100 simple, and the 200 is the red line. And it's based on, these averages are based on the average of the day's closing prices. So for example, the 200 simple, which is the red line, is based on the last 200 days. Take all of those prices, add them together, and divide by 200, and you come up with a value, which if you go back to 6th grade was the mean, I believe, which is the average. So there's your number right there. 118.62. So the last 200 days on Apple, divide them all together, divide by 200, and you'll come up with $118.62. Same thing is true with the 100 simple moving average, except obviously with 100. Now, again, how do I use them? Well, I use them as long-term support and resistance. The time frames on which I use them the most often is going to be the daily chart, the weekly chart, so daily, weekly, and those are really the two main time frames. I mean, those really comprise 98%. So if I did a bell curve like this, daily and weekly would be the 98%. The extreme majority is every now and then I'll look at the monthly chart, and every now and then I'll look at the hourly chart. If I'm doing a short-term weekly credit spread or something, I'll look at the hourly, and again, sometimes I'll look at the monthly chart. If it's a stock that's been around for a long, long time, then I'll be a little bit more okay with checking out the monthly, but sometimes it very rarely even has anything on it if it's a shorter term stock. So again, I use them because a lot of people use them. I use them as a support and resistance tool. And again, that's pretty simple, is if the stock is above the long-term moving averages, it acts as a support, and if it's below them, it acts as a resistance. So notice right there, this is the 200 simple moving average acting as a perfect support. There's the 100 simple moving acting as a support. There's the 100 acting as support. There's the 100, there's the 100, there's the 100 acting as support. And then back in here, Apple broke down the 100, 200 simple moving average, broke down, the 200 became a support, traded back up to the 100, became a resistance, broke through the 200, came back up, retest the 200 as a resistance, and traded all the way back down, and then ended up trading back up to the long-term moving averages, and again, failing them once more as a resistance. So now, on Apple, now that we're below the 100 on the daily chart, 100 and 200, you'd act as a resistance. So earnings is coming up in just a few days. Let's say, hypothetically, Apple gaps up about 15% on earnings and opens right around here. What would be likely the situation? Well, if it opened above this particular price, definitely have a lot of people, a lot of bears right here who are trapped, but the 100 and the 200 would become a little bit of a brick wall for Apple to break through. But based on the gap, I would be bullish, and then the long-term moving averages would be a little bit of a target for me. Now that you can see, since Apple is quite far below them, what could you do here? Well, you can always flip over to the weekly chart, and then here's your weekly long-term moving averages. And the weekly long-term moving averages really just give you the generally big, giant trend perspective. So you're talking, you're not going to be buying off these very often or selling off these very often, but it's very, very crucial and important if any stock closes below one of these averages. If that happens, things are going to get interesting. So here's the last time that Apple closed below the 100 simple on a weekly, and that was back in 2008. We all know the story. Then closed below the 100 simple weekly in 2013. We all know what happened on Apple there. It did close below the 100 simple moving average right there, and if you went bearish, you lost money. Simple as that. But it did bounce off the 100 beautifully right there. So probably to give you another signal to go long. Here's obviously your double bottom on the 200 simple moving average on the weekly chart. And notice on Apple, again, we closed below the 100 simple on a weekly right there. So I do anticipate this becoming a support. And if on earnings we gap down below 91.68, ladies and gentlemen, on Apple, it's going lower. Simple as that. That's my prediction, at least. And that's really how I'll use the long-term moving averages. They're very big, strong support and resistances. And if you hide all the lines on your screen, if you are a long-term trader or a swing trader or a positional trader, core trader, life trader, whatever the term you want to use, doesn't really matter. Do you like buying stock and holding them for long periods of time? And if the answer is yes, then I do think you should at least check out the 100, 200 simple moving average on the daily and the weekly charts. And again, sometimes on the monthly, but I very, very rarely look at it because at that point, it's so much data that really, it's just so much data. I mean, the last 100 months, you take that entire price and you divide it by, or you add up all the prices for the last 100 months and divide it by 100, you get 61.29 on Apple, which is also pretty far away from where it is. Now you can say, Jeremy, is that a target? Well, possibly, but you can see we never really bounced off of that before. We've gotten close a few times, but never really pulled back down to those. So that's why I don't usually use the monthly charts that much. I can use the monthly charts on an ETF, something that's been around for a while. So XLE, this is the energy sector, and you can see right now we are battling the 200 simple moving average on a monthly chart, and it just formed, like just recently. The close below that usually is not bullish, but again, a lot of stocks, we haven't had any real interaction with the long-term moving averages. A lot of traders say if the 100 crosses the 200, that's a bearish signal, and if the 100 crosses the 200 up, that's a bullish signal. I'm not here to say yes or no to that. I personally, could see, okay, there's the cross. It moved a little bit bearish, right? There's the cross bullish, and it, kind of did its thing. So I would say that it could be like a 1 cent out of a dollar bill worth of information to me. It's not really that crucial. You find out here's your resistance price, and then the stock breaks through resistance, and you're going to go bullish. Oh, and the 100 crossed the 200. Okay, cool. So it's one of those things like I'm not going to be, taking all my analysis based on that. But for notes, the 100 is about to cross the 200 on XLE. So that's not going to be a bullish signal, right? I'm not going to specifically say, okay, this is the time to buy, because it looks pretty bullish overall. And again, here's the daily chart, and here's your long-term moving averages, and you can see how well they've acted as a support and resistance tool in the past few weeks. So that's how I use the 100 and the 200 simple moving averages. Those are the time frames that I usually use them on. Again, very rarely do I look at the monthly and the hourly, but I like to see them as a support resistance, kind of a longer term tool, and every now and then, depending on whatever stock I'm checking out, I'll just simply pull them up to find out where they are in connection with where the stock is, and that gives me some idea of what to do. Last example, here's Amazon, and without having any other information on the chart, we can see that we have closed below the 100 simple moving average of the big nice candle. So we've closed below it. We have come back up and retested it right now, so we're now below the 100 simple. So if you're saying to yourself, Jeremy, what does that mean? Well, let's go back and look at the last time Amazon closed below the 100 simple, retested it, would be back in early 2014. So there's the close below the 100. There's some retesting, and in the next few months, it went a little bit lower. So you're saying, Jeremy, do I anticipate Amazon to go a little bit lower in the next few months? The answer is yes, I do. So depending on when you're watching this, if it's 4, 5, 8 months in the future, find out what Amazon did, and if it does something like this, know that a lot of my traders and myself will be very happy, very pleased. Our bank accounts will be smiling, and you should hop over to reallifetrading.com, check out all other free videos, subscribe to our YouTube channel, and all that other kind of good stuff. So ladies and gentlemen, thanks so much for watching this video. I really appreciate it. I am on Twitter at NewsNuggets. We are on Facebook, Real Life Trading. We are on LinkedIn. Be there or be rectangular. I'll see you later, and until the next video, remember, love life, live life, and trade it. See ya.